GM, and welcome back to Crypto Saving Expert, the show where we discuss the latest cryptocurrency news and introduce you to the pioneers and the founders of the space. Today, I'm very kindly joined by Ben from Uranium. Ben, how are we doing today?
Yeah, I'm brilliant. Thank you. Really good. Thanks very much for having me.
No worries. And guys, we're going to get into it as well. If you're wanting to see more from Uranium as we're going through today, all the links are in the description, so make sure to check them out. And also you can see here on the banner is their Twitter as well. So go give them go check them out while we're talking as well. And as always, if you have any questions, put them into the chat and we will go through those. But first off, Ben, let's introduce Uranium, and then we'll talk about your journey through Web3 and ultimately, you know, the core reason behind Uranium and why you saw the opportunity in the market there as well. But Ben, could we start off with, you know, what is Uranium? We won't go too much into detail just at this moment. We'll go further into detail in a moment. But what is the core of Uranium?
Yeah, it's a really great question and something we've spent a lot of time telling everybody in the industry about, as you'd expect. In short, in one sentence, it basically is using blockchain technology to make physical uranium accessible and tradable to as many investors as possible. That's what it is.
And we've seen tokenization of real estate, of other assets as well. There definitely does come some more difficulties with tokenizing uranium, but we'll get into those later because some super interesting points to go over there. But guys, if you're watching this video, make sure to slap a like and subscribe today, and we will get to those and drop some alpha later in today's stream. But Ben, before we go further into Uranium, what was your journey into Web3 and ultimately, you know, helping found Uranium and to the point where you are now?
Yeah, so background is a combination of things. So I started in consulting. I didn't really know what I wanted to do. And then, like many of us in the industry now, found my way into TradFi first. So worked as a consultant to lots of financial institutions, then did a long stint at Morgan Stanley. And so then, but after that, wanted to do something a bit more entrepreneurial. So I spent a few years working on products for a fintech that's focused on AI. So using AI to generate investment signals on equity and crypto for a brief time before that was in 2022. And then sort of found my way, was doing a bit of freelancing and found my way through a former colleague into the Uranium project, and the rest is history. And so I've been doing this for the last year. So I got to do the fun bits as it related to Uranium. A lot of the legal thinking had gone on, a lot of the partner sourcing had gone on, and then they basically were like, well, this guy can build products, so can you come in and help us get it to market and execute on this and help scale it? And that's sort of the journey that I've been on. So career's always been at the intersection of finance, or rather more specifically investment and capital markets and technology. So I've always been involved in, I'm not an engineer by background, but involved in how you use technology to improve markets and improve access to markets and improve investment outcomes for individual investors was a big part of my role at the AI FinTech Bridgeweave. So this was a pretty natural fit in getting into Web3. We dabbled a little bit in my previous role, but this is sort of hardcore working within the Tezos ecosystem to actually broaden access to a market that is super critical, but something that's not been accessible to the individual investor until very recently.
No, awesome to hear. And Ben, where are you based, and where is the business based?
Yeah, so I'm based in the UK, so London nominally. I live a little bit outside of London, but London for work is sort of where I spend most of my time.
Yeah.
And the team, we've got a decent chunk of us in London. We've got a couple of our colleagues in the BVI as well.
Okay. Yeah.
It's been very amenable, and then our partners at the UK. So we use Archax as what is one of our key partners. They're obviously FCA regulated in here in the UK.
Yeah.
And then, but it's a global team, I would say. We hired someone earlier this year in Asia, our first Asian hire. Brilliant. So, we've got round the sun model or follow the sun model. We're kind of global, but driven out of the UK primarily.
Oh, brilliant. I'm always going to support the UK projects and teams. I'm actually at the Solana Super Teams event now, where they're trying to empower the UK and get more projects starting up here and not always going out to Asia or other places to launch as well. So definitely always support the British projects here. So great to see that you guys are still based out of here. But let's get into it. What was the thought process behind tokenizing uranium, and where do you even start with doing so?
Yeah, so I think zooming out a little bit and thinking about the thought process behind it is most people, and I'm sure most of your followers and people watching this will have heard of uranium in some way, shape or form. And so, it's a critical asset, and really as it stands right now, the only material that can go into nuclear energy production. Mm-hmm. And so when you think about the importance of nuclear energy and the growth, even more demand for nuclear energy and growing importance of that, whether that's from private companies like the big tech companies that are making lots of investment in nuclear, or whether that's from nation states. Obviously, we're in the UK. The next nuclear reactor at Sizewell C got final approvals last month or about a month ago. We're seeing China greenlit 10 new nuclear reactors. The US talking about quadrupling output. So it's nuclear as a theme, and uranium is the key input into nuclear energy production. It's something that lots of people are very focused on, and there's been quite a big perception change towards nuclear energy, over the last few years. That combined with a market that before we launched in December is sort of very difficult to access, makes it, we felt, a good starting point for tokenization, because there's good alignment with interest from people, because people have heard of the asset, unlike a tokenized money market fund, which very useful, but doesn't necessarily align to an individual investor's interests or kind of wider understanding of market demands. So good alignment from the sort of type of investor that is already operating within the Web3 space and sort of interested in trading regularly. But in a market that is very hard to access. So based on current spot, if you wanted to buy physical uranium, you'd need to do two things. You'd need to have an account with a converter. There's only 3 of those globally. And you need to set up the operational aspects around that and pass all of the KYC and KYB. And you need to be an institution that can pass all of those, what we'd want, right? Rigorous checks to actually own physical uranium. And then, notwithstanding that, and assuming you did that, you need about $7.1 million to make a minimum trade in the physical market. So as an asset, it's not particularly accessible. And we're not the first ones to think that, right? There's a big closed-ended investment trust that's listed in the TradFi world. So it's called, it's listed in Canada and New York. And then there's a UK different company, but there's a UK one as well that, again, is a closed-ended investment trust. Because for a lot of years, people have seen this trend. The price historically of spot uranium has performed well relative to other asset classes. And it's also something that is uncorrelated to lots of other major asset classes, including Bitcoin, the S&P 500, gold and oil. And so, if you're a hedge fund and you do have that kind of capital, or you're a big institution and you can actually get access to the physical, it becomes super interesting. And people have come before us with other vehicles in the TradFi space. And so we looked at those vehicles, we looked at the barriers to entry, and we said, and trading is all OTC right now, so over the counter. And so actually, can tokenization move this market forward? Absolutely. And so that's that in combination. So the combination of those three things really, right? Widening demand and supply still lagging that to a certain extent. So it makes it interesting from an asset fundamentals perspective. Better alignment and interest with a lot of the other tokenized real world assets that are out there at the moment with the wider investor community. So you hope there's demand for it. And we've just released some research last week as well that sort of seems to emphasize that too. And then the third thing is it's a great use case and sort of exemplar of how using blockchain technology can move a market forward and make it more accessible. With the long-term ambition, that attracts more capital and therefore more people participate in the nuclear and uranium thesis. And then that improves the outcomes for everybody because you get more transparent pricing, you get better liquidity, you get more capital allocated to the sector, which means more innovation. And given the criticality, we would argue, of nuclear to society's demands, not just from an investment case, but to society's needs, it seemed to be all a sort of virtuous circle of why we want to do this and start with the tokenization of uranium.
You're literally solving a lot of problems there. The barriers to entry, like you said, $7 million, you've got to go through certain checks, got to go OTC, absolutely crazy for an asset which is, well, not so widely available, but widely used globally. And like you say, correlates directly with the price of energy and other bits there. But what's happening in the uranium market right now? What is driving the renewed interest and demand? We can see here on the chart that I've just got there, you've got a lovely uptick from June 23 onwards. But yeah, what is driving this demand right now?
Yeah, I think demand is driven, I think without that change in perception or sort of softening of the stance towards nuclear, I don't think you see any of the other things that are driving demand right now. But in short, I think nuclear is the only proven at scale in market sort of solution to 24/7 energy demands, right? Which are only increasing with everyone's use of AI and AI's proliferation and wider data processing requirements that need that 24/7 energy. And so nuclear has been the only proven, in terms of pound for pound energy output, nuclear is the most efficient and most effective kind of energy source or energy production means out there. And so that's why I think we're seeing demand driven by, the big tech companies of the world and the AI companies like OpenAI making investments into nuclear, reopening nuclear power plants and the like, because it's in their interest to do so and make nuclear energy as cheap as possible, because that solves their problems from a energy consumption perspective. I also think we're seeing, as we all recognize, and we've had a pretty decent hot summer so far here in the UK, right? As we recognize global warming and the importance of increased use of low carbon energy solutions and continuing that transition from fossil fuels. It's super important that we kind of use those energy sources more and more. And unlike solar and wind, you don't have an intermittence problem with nuclear in the same way you do with solar and wind. Like, obviously, if there's no sun or there's no wind, you don't get the same level of energy production. And so in terms of energy effectiveness, and as the world gets more volatile and sort of we're seeing more volatility at a geopolitical level, like energy security is super important. And if energy security is super important to you as a country and a nation, then, investing in nuclear seems a good way to meet that need. And we're seeing that, with the largest economy in the world, with the US and the administration making the changes that they need to make to widen all assets of the nuclear supply chain, right? So they're looking, and they made a big pronouncement a few weeks ago around wanting to quadruple output of nuclear energy and make that a bigger part of the energy mix that they have in the US. So I think it's really that combination of perception changes, more volatility and sort of demands around energy security and the efficacy of the proven at-scale solution of nuclear that's really driving the sort of broad demand and increase in demand. And obviously building a nuclear power plant will get cheaper with small modular reactors, but it's an expensive endeavor. And so
sure.
nation states are still going to be the primary sort of drivers of commissioning new reactors and things like that. But so that's the they're the two pillars to start with, and then you layer on top of that, well, actually we've got 7 companies, 8 if you include OpenAI, that have got enough capital to invest themselves and meet their own power demands, seeing the benefit of it as well. So that's further increasing demand. So I think that's really, as I see it, the kind of real drivers behind sort of nuclear demand and in turn uranium demand as it stands right now.
Yeah, I think it's very simple. Like you say, there's going to be a need for more nuclear energy going on, and especially with all the geopolitical stuff going on right now, it's definitely going to play into uranium's favor. But let's talk about, we mentioned it earlier, let's talk about some of the legal and regulatory considerations. I just wanted to point out as well, like Pax Gold, you can redeem the gold if you have the token. It's not the same with uranium, is it? We can't then redeem the uranium ourselves.
So it's a great point, but it's a really, from a legal and regulatory perspective, it's really important that kind of we talk about this, because our belief is, if you're going to tokenize a commodity, if you aren't sort of enabling physical delivery and therefore your tokens entitle you to physical delivery, you aren't really sort of making that, you essentially have tokenized another asset that references the price of it, right? You've created a
derivative,
to a better phrase, or some kind of derivative. So you can, so going back to my earlier point, you can take physical delivery of xU3O8.
I was joking.
What does physical delivery mean in the uranium context, right? Physical delivery means you've got an account with a converter where the uranium can be stored, and there's 3 of those, as I mentioned before, globally. There's 1 in Canada, 1 in the US, and 1 in France. And so if you do have a converter account, you can instruct us to burn your tokens and deliver the material to that converter account. So you need to give us the converter account. You need to do KYC and KYB probably, because you've got a converter account. But then you can instruct us to take physical delivery, and we can do that because from a legal and regulatory perspective, and this is what really took the time, as I mentioned at the top of the stream, right? I got the fun bit of bringing this to market. A lot of the legal thinking and wrangling had been done here, but actually, what's really important is if you own xU3O8, your xU3O8 is your record of beneficial ownership of the physical uranium. So it isn't that you own shares of an SPV. It isn't that you own some sort of reference asset. You actually are you're a beneficial owner and have an equitable interest in the trust that owns the trust assets, which is the physical uranium in Canada at Cameco, which is who we use as part of the project.
Brilliant.
So, and the reason we can do that, and this was news to me, but we've got a fantastic legal team and general counsel, is forgetting the blockchain for a moment. In just English common law trust law, like you can assign, if I'm a beneficial owner of a trust, regardless of uranium, I can assign my interest to anybody with a written instruction and a signature. For those, if that sounds familiar to people, that's exactly what a transaction on the blockchain is. If I sell my xU3O8 to you, I've put an instruction to sell it from my wallet to transfer from my wallet to your wallet, and then I sign that on chain. And so it's a really elegant solution to sort of breaking down barriers to accessing physical commodities. And so that's been really important. And what also was really important is, given the nature of the asset, and we've had a lot of inbound in that regard, is that we've got a great partner in Archax that is operated. They're FCA regulated here in the UK, so they're FCA is the financial regulator, the Financial Conduct Authority. They're the regulated trustee, so they actually kind of are the ones that manage the trust and are managing the sort of balance between token holders and ensuring that that's accurate relative to the underlying uranium. And the underlying uranium proof of reserve statement is on our website as well. It's on the bottom of every page. If you click proof of reserves, you'll see the statement from Cameco there, talking about the number of pounds, or in fact, they do it in kilos, which is strange because the market operates in pounds broadly. But you can see that. Thanks for bringing that up. Perfect. So the other bit that we've spent a lot of time from a legal and regulatory perspective doing is, and this is something that we all within the RWA space are spending a lot of time doing, is just because we happen to have put it on chain doesn't fundamentally change the activity, right? So delivery and receipt and storage of uranium is very highly regulated, as one would want. But actually, if you're trading it from an investment perspective and a financial speculation perspective, spot commodity trading in many jurisdictions isn't regulated. So it's actually the derivative activities that generally tend to be regulated. And so we spent a lot of time, because of the structure of the token, as I explained before, that it's not a different asset, it's not a new asset. Actually, what we've built is something that enables more effective and more efficient spot commodity trading. So that doesn't put it into scope of being regulated. The other piece, which is really important from a regulatory perspective, is there's no SPV, there's no other asset. It is just physical uranium. And so consequently, we've had to spend what I would consider to be a crazy amount of time, but a lot of time explaining to people that this is not a security. And actually, when speaking to a lot of institutional investors, that this doesn't change the nature of the asset. It just makes it more accessible. So, you'll notice I've not really used the crypto word, and I've talked a lot about blockchain technology, and we've learned that that's super important, because the minute you talk about crypto or Web3, people jump to the fact that, well, this must be super volatile as an asset, and everything else that goes along with investing in meme coins. And so for us, this is a great project and a great blueprint that we've built for tokenizing commodities that should enable the broadening of market access to uranium first and foremost, but we are also in conversations with other types of commodities that share similar characteristics to uranium, where we could do this as well. Because this is certainly what I get excited about, and what I'm, looking forward to, is where we move from talking about DeFi and Web3 and TradFi to actually we just using blockchain infrastructure because it's the most effective option we've got right now, and we're just talking about finance and making markets more effective and more efficient. So I think this is a great blueprint for doing that, and I'm super excited about seeing where where we can take this going forwards.
Amazing. And what was the opinion of some of the leaders in the uranium industry as well? When they saw, okay, we've got this new project, they're bringing it on chain. Were they keen, or were they perhaps a little bit scared? Did they see you as the next competition?
Yeah, so I think it depends on. I think it's mixed right now. We've not seen much negative views, which is it means one of two things, right? Either that we're doing something right, or that they aren't engaging. I hope it's the former, but could be the latter without confirmation. But yeah, so we work with Kast and Uranium, which are one of the larger uranium brokers in the physical market, and they've been involved from the beginning of the project. So they see the benefits of doing this and on why one would want to do this. As I said, there are other products in the market, the Physical Uranium Trust that's listed in Canada. So other people have looked at, and there's been previous attempts at tokenizing uranium as well. So I think it's widely recognized that the market is opaque and is somewhat lagging other financial markets, and that's reflected in the fact that there's a lot less financial investors and speculation in uranium compared to other commodities, whether that's oil or gold or whatever else. And I don't think anyone's ever said, we wish we had less people investing in a particular asset, right? No one's ever said that. And you look at the evolution of every market, whether that's equities, whether that's fixed income, whether that's other commodities, by having more people enter the market and put their capital into the market, it's generally resulted in beneficial outcomes, right? In terms of pricing, in terms of capital allocation more broadly to new projects and new innovation, and to, individual outcomes for individual investors that have benefited on the upside as that's happened. And I think going back to the earlier question around why tokenize, well, you're seeing with those more traditional asset classes like equities, like fixed income, they're now at the end state of, as it currently stands, of tokenizing those because they see the benefits of enabling 24/7 trading, native fractional ownership, that kind of stuff. What we've done with uranium is skip all of those typical market development stages, right? Where you go to, we've got organized exchanges and then we trade that electronically and then eventually we get to tokenization. The beauty of this is, well, the market is already behind. So why don't we leapfrog those traditional stages and go straight to the good stuff in tokenization and using blockchain rails to enable that? And that's kind of the ultimate end goal is, people see this as the effective mechanism for trading spot uranium because they can, which again goes back to why it's so important to enable physical delivery, because the vast majority of participants are people in the nuclear supply chain that are mining uranium, milling uranium, buying uranium on behalf of utilities using it. And so if you don't enable the physical delivery, you're not really moving the market forwards.
Yeah, I've got to say, I was really shocked when you said, there is actually a physical delivery. So very bullish from my point of view there. I thought that would be something which, was out of reach, not possible. If we could touch upon some of the downfalls of perhaps competitors that have come in the past and tried to following a similar model, where does where do you stand out? And you've already been going for a long time as well. Before market was building up. Why do you think you've lasted the test of time so far?
Yeah, look, I think we've benefited from the vision of kind of the Tezos Foundation and the wider Tezos ecosystem in being able to support the project and wanting to support the project. And I think that's enabled us to go and buy the actual physical uranium. And so that fundamentally is the difference between us and any other project that's come before us is it is the physical uranium that can be pointed to that's in storage and held in trust. So, I think that's really the innovation. We believe we're the first that have, and we've got good reason to think that because it's still quite a niche asset, right? But we actually have the physical material in storage that's then, we're just using the tokens to enable wider ownership, and the tokens are then your representation of your proportional ownership, depending on how much you have of the physical uranium. Previous attempts have done things sort of linking NFTs in 21, 22 with sort of forward sales agreements with, mining companies. So, which is valid and a good sort of use case from one perspective in terms of getting more capital into the uranium exploration, because there is a demand and supply deficit in the market.
Yeah.
But it isn't, we would argue that wasn't physical uranium, right? That wasn't enabling an investor to get exposure to the physical uranium and own that physical uranium.
And what were some of the decisions to stick with Tezos and build that relationship there?
Yeah, so the original idea really came, precedes me, but it started with Arthur Brightman, who was the co-founder of Tezos, thinking about this and sort of seeing the initial opportunity, and then that was sort of incubated within the wider Tezos ecosystem in terms of that's an interesting thesis actually, and it could work. And so how do we build this out? And then the project gathered steam, and then various partners were engaged, and partners dropped out, and new partners came in, and then eventually, as I keep coming back to, I got the fun part of coming in towards the end of all of that thinking and going, all right, we've got these partners, we've got the backing of the foundation, let's go and make this happen. And lots of late nights and sleepless nights, certainly last week with the exchange listings where you've got that anticipation.
Let's jump into those.
Yeah, so
Where
I mean,
can people find xU3O8 right now?
yeah, so xU3O8 is 4 places now. So we've got
Mhm.
uranium.io. So if you've got an EVM compatible
Yep.
wallet like MetaMask, you can go to
Mhm.
uranium.io. You see buy uranium in the top right hand corner. And it's as simple as connecting your wallet, giving us an email address, funding your account with USDC, and away you go. So this is all, must add, this is all deployed on Etherlink. So the
Yes.
EVM compatible rollup built on Tezos. So you will need to have Etherlink added as a network to your wallet, but it's for those in the Web3 space, it should be pretty straightforward.
Yeah.
If you are, this talks to a good point. So that's really the sort of Web3 native. We only do KYC kind of based on our ex post analytics. So when you transact, we're looking at on chain, doing really smart on chain analytics. We've got an outsourced compliance team, and then we've had 2 instances since we've launched where people have needed to do KYC since we implemented this change in sort of February, March time. So it's very rare that we need to do KYC, but we obviously don't want to deal with sanctioned individuals, particularly given the nature of the material. So that all happens ex post. But if you are more of that Web 2.5 user that's dipping your toe in the water with crypto, and there's the vast majority of people trade on exchange, right? We recognize that we needed to get this listed on exchange. And so a big milestone for us, and it was, I was in New York last week at the time, so it was an early start for me. I think I was awake at 2 or 3 a.m. getting ready for it.
Did you even get any sleep?
Which was brutal, but we went live on Gate, on KuCoin, and on Mexi last Thursday. So that was a big milestone for us. So, and we, huge kudos to the wider team that's working on this, because it kind of went off without a hitch. I was complaining the most, mainly because I needed more coffee, but other than that, it went off without a hitch, and we've seen some decent volume, which is great. And so, as we think about the product, we're sort of got uranium.io, which is, I don't know if any DGens are going to directly want to be sort of investing in uranium right now. It's probably a good diversifier, but
is there perpetual? Will there be perpetuals on these exchanges?
So the plan very much is to have perpetuals on these exchanges.
Brilliant.
So in terms of product innovation, perpetuals is obviously a logical one. What we want to see is that there's enough volume, and the uranium price doesn't actually move that much. It's got about the same volatility as the S&P 500, maybe a little bit more. So it doesn't move as much as, typical perpetuals. So we're waiting to see the volumes come through. At that point, I'd expect that we'll have perpetuals or other derivative products on top of this. And also in terms of product innovation, so that third segment that we've not yet talked about is really that institutional space. So you've got uranium.io, where you can connect your wallet if you want to have the self-custodial experience. We've got the exchange listings, and we expect to have a couple more exchange listings announced this month, so later in August.
Brilliant.
If you want that sort of more app-like experience with this KYC and dealing with one of the exchanges. And then the third piece is really the institutional channel. So in terms of institutions, these are like smaller hedge funds, family offices, is one angle to that. So if you split the institution into sort of an A and B, the financial investors and financial institutions that like uranium or haven't thought about uranium but like the characteristics of the asset and are more intrigued by it now because there's more liquidity and more price transparency. We hope for more liquidity, of course, but certainly more price transparency now. It becomes a bit more appealing, and you can do it at smaller clip sizes than the $7 million. So they're one angle in terms of financial investors, or institutional investors rather. And then the other is people involved in the nuclear fuel cycle. So, the uranium price as it stands right now is about just over $71 a pound. So that's a pound in weight.
I have just searched the total market cap as well. It's got about 51 billion, if that sounds correct with you.
Yeah, it's about that. Yeah. So and so it's got that sort of piece of the price is a little bit depressed in the view of the market. The broader experts in the market in the TradFi space, they expect, the price to be a bit higher, and certainly a lot of the big brokers have said that. And so we're having early stage but interesting conversations with people, brokers, fuel buyers, even miners, that are saying, well, actually, we can hedge some of our risk on future production and lock in a gain because we believe the price is going to increase in the future, because why else would we be in the uranium industry? Through your tokens, build up a position slowly, manage our risk, and potentially take physical delivery down the line if we need to deliver that to a nuclear utility provider. So, I think what we're looking at is products in all channels that can meet the different needs and different requirements of those 3 or 4 main cohorts, right? So the Web3 user, the Web2 or Web 2.5 user that's going to be on exchange, and then the institutional investors that are either financial institutions and investors or people directly involved in the nuclear supply chain.
Awesome. And Ben, I've got to ask, your take on this. How come the price of uranium is relatively quite stable for its size there? Is there government supporting, or what kind of mechanisms are keeping it at such a kind of consistent rate?
Yeah, it's hard to know, because that's one of the challenges with an opaque market, right? Is you don't actually know where the buying and selling activity is coming from. But you've got that physical uranium trust that's sat, on a huge amount of material. So they obviously exert some pricing power, and the supply is tightly controlled, as one would expect. But it depends on who you look at and who you follow on X. People have got all kinds of theories. I don't hazard a guess as to which ones are true or not, or even if they are true. But in short, it's really driven by demand from the utility providers. And so when there's been big lock-ins of term contracts, so the market is delivered either on a spot basis, which is within 12 months, or on a term contract, which is after 12 months. So what we have seen historically is prices have spiked as utility providers' term contracts have rolled off, and they've needed to enter the spot market to meet that demand, or negotiate new term contracts, which resets the current spot price. So the fundamental drivers are there, and certainly if you look at it over the last 5 years, the price has increased by about 140%. And that if you look at it on a price return basis, that had outperformed the S&P 500. Obviously, not financial advice. People need to do their own research, and it might not happen in the future. But that shows you the broad, long-term trend of the price relative to demand, which I think is fair. But in terms of driver, this is one of the challenges, as I come back to at the same point, which is if you've got opaque OTC markets with buyers and sellers agreeing things bilaterally, you're never going to have a full handle on what's driving the market. And, there's some new supply come online in various different places. Obviously, the sanctions on Russia post the Ukraine conflict beginning. Russia is a big producer and consumer as well of uranium. So there's all kinds of different dynamics. But I think, what we hope to be able to do is have more explainability on that in the future, as we've brought more transparency to the market and more people use xU3O8 to get their exposure.
Brilliant. And in the future, do you see perhaps people transitioning from stable coins to UX308? Do you think that will be the natural switch over there? I think
if I put my TradFi hat on and CFA hat on and asset allocation and thinking about investment fundamentals, I think there's a place for both, right? And different types of
course.
My hope and my wish is that what we are able to do as an industry and an ecosystem is replicate the full suite of risk return options for investment that you have in the TradFi world, but doing that much more effectively and efficiently on chain. And making it more composable, more transferable. So where I do see potential is right now people are using stable coins for that composability with the DeFi protocols, right? I think actually if I'm running a lending protocol, absolutely, uranium could fill that gap as well in terms of collateral, because it's probably lower volatility than any other blue chip crypto asset like Bitcoin or ETH. But I'm going to get less capital appreciation. But I don't necessarily care about capital appreciation if I'm a lending protocol, because I want the lower volatility, because if someone gets margin called. So I think it serves a slightly different purpose. And as we add that composability element, and we've got lots of advanced conversations and hopefully an announcement at the end of this month about that, I think it can sit alongside stable coins and serve some of those purposes. But obviously it is a risk asset, if I use my terms. So there is potential to get upside, because it's not just looking to maintain a stable price of $1 or €1. And so, I think it does become a compelling asset that one could have in their portfolio, if you believe that correlation that historically, or lack of correlation, it's historically had, and its price it's historically exhibited in terms of potential. It could be interesting to sit alongside some, an individual or an institution's wider digital asset application, but I don't see it replacing stable coins. I see it slightly nuanced. It's sort of nestling in. Think about that typical risk return diagram. You've got risk on one axis, return on the other. I think it's a little bit further up from cash, but it's not quite as risky, nor in as much return as your blue chip crypto assets.
No, brilliant. Very well said, Ben. And for everyone listening that wants to get stuck in more, where can they join the community, read more about uranium? We've already gone through, where they can trade and find uranium, or xU3O8. But where's the best place to join your community and really ask those questions and learn more?
Yeah. So in terms of learning more, uranium.io, the website is we've spent a lot of time looking at what questions come up and making sure the Learn Hub, which is that middle button at the top there, kind of does a very good job, I would argue, of answering lots of those primary questions. Our white papers there as well. You can obviously see the proof of reserves. I know that's very important for people. In terms of, and if you've got something that we've not answered on there that's a burning question that's stopping you from making a decision on it, or something that would help you make a decision, there is chat support on the website as well, which has been an interesting part of my job, sort of responding to individual questions coming through there. But in terms of community and wider engagement on socials, we do have a Telegram community which you can get to through the website, and of course uranium_io on X is the primary place where we publish all of our news and engage with our community. So Telegram or X is the way to go, I think.
She is the future.
Indeed.
Brilliant. Ben, it's been a pleasure having you on today. Guys, if you have any further questions, make sure to join their Telegram and their community there. And also, if you have any questions and you're in the Discord, just shoot them over to me and I can ask the team for you as well and bring up the discussion. Ben, I would love to invite you back on, on the next announcement. I know you guys are really working hard, building on further announcements to bring that you can't even talk about today. So I look forward to seeing that for me. And I know a lot of our audience as well, they're going to be excited for perpetual trading. We have a lot of traders amongst us as well. But yeah, super exciting. I like the way you've spoken and put it. And personally, I think even if you don't know too much about uranium, it doesn't take much. One read of the newspaper, and you've got more nuclear power plants coming, and all the threat of nuclear weapons and all of that. And uranium definitely is a hot commodity as such. So something that I expect to I will be keeping an eye on as well, and looking to trade myself. And I think for me, it's a nice hedge. It's a better hedge than stable coins in my opinion, guys. Not financial advice, but it's something that I'll be looking to perhaps diversify some of my stable coin portfolio, or even gold, etc. like that. And I'll be looking for assets and real world assets like uranium there as well. But Ben, thank you so much for coming on today. Really appreciate your time. And the audience as well, really appreciate you listening in. Make sure to slap a like on today's video, and I will see you all on Monday. Ben, thank you very much.
No, thank you. Really appreciate the time and a great chat. Thanks very much.
Let's go. Take care.